Hey, how's it going, guys? I hope everybody's had a great weekend and a great last week, a profitable last week. We are going to do a quick weekly analysis, take a look at what to expect through the week, what we are seeing as of the current market structure on the monthly and on the previous weekly candle. So let's dive straight in. We have a very interesting week up ahead. We have CPI inflation news coming out this week, which means this is going to be a very impactful week. All right. So taking a look at the current monthly candle, we can see that the current monthly has rejected at the trend line on the weekly. We'll take a look at that more deeper into the weekly. What we can see is currently we are trying to go for the wick fill on the previous monthly candle. We still have not broken below 1918.967, which means that we are still not sure if we're going further down or if we are going to rebound up. So the second point to look at is we are still consolidating towards the sideways on the monthly. We have 1, 2, 3, and now fourth monthly candle, which is still consolidating within this range. Ideally, we want the monthly to kind of further drop down. Once we see a closure below 1918, 1919 a region, we can expect that market is going to drop further down into 1826. That's going to be the next target. So let's mark up that next target. Alrighty. We do see on the monthly that we have created a further bottom wick. We've broken below, created a newer low comparative to the past couple months. Can we expect the current monthly to keep pushing down? We do see the rejection coming back within this range. Will we flip up or will we continue down? That's going to be the big question. Based on market structure, it looks like we could make a little bit of a bounce again before a eventual push down. Diving into the weekly, what we can see is the weekly rejection range. We've kind of closed exactly above that area, 1919, as we spoke about. Based on the monthly, weekly is giving us the same range. We have taken support at that level once again. The previous candle breaking through, the next one jumping back down and taking support at the broken range. Now, what does that mean? Does that mean the current weekly is going to go bounce back up before a pitch down? Ideally, yes, possible. So there's two things that can be seen. We are moving through a channel towards the downside. So let's pull that channel. What kind of a channel? So best way to identify a channel is to look at a line chart. So let's say this is our channel, a perfect channel. And now let's go back into the candlesticks. So based on the body structures of the weekly, we see that we are moving it through a channel. We are constantly seeing rejections at the channel, which is getting narrower as we keep pushing down. Now, we are also with an asymmetrical triangle on the weekly, which means market breaking above or breaking below gives us further indication as to the direction market would be moving within this channel. The current speculation or the current expectation would be a break further below. Now we tap into 1826 would be a break of this channel. The next one would go for a retest, which would be a good area because market has gone bullish within this range twice at least. We came back down for a retest previously, going super bullish. So we can expect a good buying happening within this range, which means we go back up, retest the broken trend line, the broken channel, and we could continue further down. Alternatively, we could end up going super bullish again. Now we do expect 2000s to be coming up again, which we kind of haven't necessarily gone above 2000s yet. We haven't reached 2000 yet. If we were to make a drop, bounce up, and then push up, we can see that 2000 level definitely possible. Now we have to wait for what happens within this channel. A channel of this nature is generally considered to be a consolidated channel because we can see we are moving from one point to other point, even though we're moving towards the direction of the downside, this doesn't necessarily mean that it is a trending move towards the downside. All this means is we are consolidating. There is no proper market decision made. However, sellers are trying to work on overpowering the buyers. You can also consider it in the opposite sense, that the buyers are trying to catch a lower position to keep pushing the market further up, right? So if we break above, we might come back for that retest and keep pushing up, right, to target that monthly trend line. So this trend line right here is what we're trying to break through. All right, so taking this out, now what we see here is there was a trend line. Even on the weekly, there's two candles that are taking support at that range. On the daily, there is a proper form trend line. We've broken through that. We haven't done a proper retest. Well, we kind of have a minor retest on the daily, but we could still go up. Now we'll look at the daily, what's happening there. Before that, let's take a quick look at rejection ranges at the top. If the market is to bounce back up to create a top wick for the current weekly, I would expect a range of 1930s to be the range where market creates a top wick before it pushes down. So 1930s to 1940s seems to be another range where market could bounce up, create that top wick for the weekly, and then break through this level, eventually giving us a weekly closure below, which would be something of this sort. So we can see that there is 1947 has a weekly rejection range on the weekly. We can see that there is a top wick for these two dojis that have been formed here where market took support, which is the range where market had to generate momentum to break above. And so this is again going to be the area of resistance. So 1935 seems to be a good level for retracement. So let's look at this range. 1937 seems to be a good region for retracement. We broke out, kind of did a retest and continued down. Now, why can't we make that retest at 1936? Definitely possible for the current weekly to take rejection and then continue down, which would be a retest of the rejection range. Market trying to make an effort to move further closer to this trend line, failing to reach closer to it because of the rejection being formed within this range on the daily, would send price further back down. Given the evidence that we see within the market structure that is moving through the existing channel, let's adjust this channel a little bit on the daily. Ready? This is the daily channel. So we see that it's getting narrower and narrower. We see that the symmetrical triangle is about to be, we're almost reaching the peak of it, which means we're about to see a break above or a break below, which with CPI news coming in could be a great thing or a bad thing as well. Now, let's mark up the rejection range we're expecting. What's the second reason that we could make this retracement? Based on the weekly, we saw that that's a good retracement level. There is a doji in the previous range. There is a good rejection range, even sitting within this spot at 1934. Historical area of support before market kept moving down. Price has come down directly to that range, which means we could still go back up to retest that broken resistance area and then continue down, which again sits at 1935. So weekly and daily, two sets of points giving us information that 1935 could be the range that we would retest before market continues pushing down. All right. So we have additional piece of information based on that. Let's look for further evidences on the 4 hour. looking at the 4-hour consolidation within this range, and whenever market enters into a consolidation range, this thing here, right? This is what happened previously. What could happen this time around? Ideally, if you look at the structure being formed here, this looks more likely. We are trying to push up, but the push seems to be getting weaker and weaker as we keep pushing up. With this rejection wick coming in on the previous daily, we could expect market to try and break above 1927, give us a proper rejection within 1937 or 1935 range. So 35 is sitting right here, which would also have mitigated imbalances on the daily. So a small imbalance sitting here. We know that there's a lot of imbalance sitting on the higher ranges, which is fine. Market doesn't leave too much imbalances on its way down. If it leaves too many, it has to make an abrupt change in momentum and has to come back up. And so given that piece of information as to the behavior of price on gold, we can expect a little bit of a retracement to 35. Now, it doesn't have to do the retracement, right? We can expect that to happen, which means the next target, if market does break through this week and come back down, is going to be the trend line, which is also a daily, weekly, and a probable monthly range, right? So if I was to take this out and take this out, hold this, and there we have a monthly trend line. So we've rejected at that trend line previously once, and we have 3 touch points, right? So from that perspective, it becomes a strong range. So let me readjust this back. Let's go back to the daily and to the 4-hour. Now, what's the interesting piece of information we can see? 4-hour is still consolidating within range. There is a broken bearish structure right there, and we seem to be moving down to take a retest, a possible retest of this broken trend line. Now this is a lower time frame trend line, which is across 4 days with 1, 2, 3, and 4 touch points. So it was a stronger one. Eventually we broke out. So this is another form of indication giving us that the road towards the upside is more realistic than the overall push down. At least a short retracement. But can we break further down and then go up? Possible. Higher likelihood of us retesting this range is also possible. Now let's look at the RSI. What does the RSI tell us? RSI broke above the moving average line. Price broke above moving average line, took first retest, went bullish, second time coming back into that range, coming back to that moving average line. So a higher chance of it going bullish again. What is the next piece of information we can't see? So we know about this thing here, right? Let's make that green so we know the difference between that and we were in a symmetrical triangle last week. We broke through that. We went further up and then eventually getting a rejection at that level. Today, we have come back down, retested that level, tried to break through below, couldn't, jumped back up. So let's see what kind of a jump that happened there. So you can see that the 1 hour couldn't close below. If we had a closure below on the 1 hour, we would have been targeting this trend line here. But this does give us hope that we could go up back into probably this range. And that's why I called out in Discord that I'm entering buys at 1917.75 with my stop loss being below. And I would be expecting market to go up. Well, eventually I'm targeting the 1935 range, expecting it to push up, hopefully, in the next couple days, and then CPI and other newses give us that push further back down. So let's see what happens there, right? On the 1 hour, we can see that there is a range to drop further down, which could be targeting this moving average line. So we will trade based on that. All right. What is the next structure that we can see that we can trade based on? We know that we are consolidating within this range till we break above 1924.590. We're not out of a overall consolidation range, a historical consolidation range. So you want market to break through that range. So you want market to break above at least 1925, which means if market was to jump up today, we could expect a range of 1925. As we can see, there is an imbalance sitting within that range, so market might as well tap the 1926 area before pushing back down. Alternatively, we could see it pushing up, taking support, pushing up, taking support, and then eventually targeting this area. Since we have news, we can also expect today's day to be extremely consolidating, which means we could just see something of this sort happening. Market could just wait to do something. It won't do much. It'll create a structure, giving you some amount of forecasting into what is going to be happening in the next couple days, but it won't necessarily give you a lot of pips. So it might end up being a scalping day, right? The best we can do is analyze and understand what are the ranges, what kind of story the market is trying to tell us, and take trades based on it. So currently, I do expect a initial retracement. Overall, I do expect market to drop down into this trend line around the 1896, 1900 region before market tries to go bullish again. Eventually, based on the monthly, I would expect that wick fill and a further drop down, right? So, which would be coming back down into an area where we've gone bullish before, which could also send us bullish again. So let's see what happens there. All right. So an interesting overall week coming in on gold. So what would be the best buying ranges for the week? Let's look at the weekly real quick. The current range is a good range to buy. If we break below 1914, the range changes and now we look for sells, right? So either we need a break below 1914, 1912 or above 1920 for market to keep pushing up. So today's daily, you can decide what kind of risk you want to get into, right? Better selling opportunities again at the 1935, 1936 range, where we are seeing a good amount of rejection range on the weekly and on the daily. So market jumps up, you can catch further sells and push it back down. How about buys? First buying range is going to be based on the weekly, looks all the way down. Let's look at the daily and identify that range. We do have a support area within 1909 and 1904 region. So even if we were to drop down, we have first range is going to be this trend line, this broken trend line retest and break above. Second range is going to be 1904 exactly, which is a previous historical rejection range. We have a wick taking support and pushing back up. Next range is going to be the trend line once again, which hasn't been broken yet. If it gets broken, then this is what you can expect, right? Goes back down. It might just keep moving down. It may not give you an immediate retest. Do this, and then you can expect this, because this is being formed even on the monthly. So there is a range around the 1890s area, which is on the monthly a trend line, which means if you break through this and you still rebound from the channel has a 80% or maybe a 90% chance of getting broken. So you can look for a retest, a possible sell entry, and continue down. All right. I'm currently looking at these sells here. I'm already holding a couple sells within that range. I'm holding a buy now. I'm going to let it run and let's see what happens, right? I'm going to try and target 1825 is the level that I've been talking about for I think a month or 2 months. I did not expect that to happen immediately. Now it is kind of coming into that spot. It is preparing to make that drop. But economically, that drop will not be a good thing for the dollar, which means that would be a temporary drop sending us back up. And I'll talk about that as a part of the daily forecast or the weekly expectations, right? So let's take a quick dig into news, what kind of news we can expect through the daily. So this is the buy trade I've taken right now. I'm going to keep this here and I'm going to pull up the news. So news. Here we are. So what news do we have coming up this week? Monday, we don't have anything much on the US dollar. We have JPY medium impact, AUD news coming in tomorrow. Tuesday, we have nothing on USD again. Crude oil, so if you're trading oil, you want to be looking out for that. If you're trading GU, then you want to be looking out for this. I may not be touching a lot of Forex pairs this week, primarily because of the type of news that are coming across all the pairs. And so I would avoid taking too many trades across too many pairs. Rather focus on understanding the fundamental aspects of specific pairs that you trade the most on. If it's highly volatile, I will recommend to try and get out of those trades. Take safer Forex pairs comparatively that don't make that kind of huge movement, and you can bear those losses if at all that happens, right? Coming in on Wednesday, we have inflation rate, CPI. So this is going to be a very high impact information news. Fundamentally, we are seeing that inflation-wise, it's not moving into the direction as to what the Feds were expecting it to be. The pace has changed, and we can see that on the forecast as well. Core inflation, they're expecting it to stay stable, while the month-on-month, they're expecting it to go up. Year-on-year, they're expecting it to go up. Core inflation rate year-on-year, they're expecting it to drop, which might end up being negative. We might see maybe a drop from 4.7% to lower, but it might still be higher than 4.3%. For inflation rate year-on-year, 3.6% definitely looks something that's possible. 3.3, 3.4, something we can expect, which might be good, right? So it ends up being temporarily good for the dollar. Gold takes a further dip. Eventually, the reaction comes back in that it's not a good news federal-wise. They might increase interest rates again, and that will reflect as a part of their interest rate decisions for the upcoming year, the plan that they're going to be publishing. So, not a good thing overall economically. Temporarily, it might end up being good for the dollar. Inflation rate month on month, similar story. So overall, this news could give us an eventual push towards the downside for the time being. But the reaction to it might end up coming in with a little bit of a lag, especially with a weight coming in on the higher institution levels for the interest rate planning. So what kind of a plan do the Feds come up with to tackle this situation? Because they might end up going aggressive again. We might see not a 25 basis point, maybe a 50 basis points increase this time around. So we have to wait and watch as to what happens, right? Now, Thursday. Moving through that, we have PPI, core PPI, retail sales, initial jobless claim. So we have a lot of things coming up on Thursday as well. So Wednesday and Thursday are going to be very impactful 2 days, which are going to be a followed up day. PPI, they're expecting it to go up as well, 0.4%. Retail sales, they're expecting contraction there. They're expecting it to go down 2.9% over the last 3.2%. I would expect sales because demand has been still going up. So I would expect this to still be above 2.9, maybe lower than 3.2, but still higher than 2.9. XAUUSD have, we spoke about this last month as well. There's news about automotive companies preparing for a price war in the end of this year, with inventories starting to go up and the new booking of new cars has reduced substantially. However, the used car market has started to see a rise once again, with inventories coming back from some of the new buyers that I've seen across the year. So might see a drop within the situation here. Retail sales again, previous was 0.7%. They're expecting it to contract. I wouldn't see that kind of a contraction right now. I would expect a little bit above. So 0.7, maybe 0.5 is something that would look realistic, given the pace at which it's been going up or down. Jobless claims. It's been kind of good, but overall bad for the last entire week. Employment doesn't seem to be good. Unemployment rate started to go up, which is hinting us to another indication of a recession-like environment coming up soon. So there's more and more indications coming up of recession-based environment. The currency circulation has dropped substantially. So if you look it up, I've been doing a bunch of research to look at what kind of things might they be looking at from a futuristic perspective for the entire of next year. Currency rotation is something that's big because there's too much debt in the market. There's too much artificial currency being printed, which was the major cause of inflation. That kind of an inflation was driving the economies, allowing people to earn more money, allowing business to make more money, save more taxes. So a lot of things got affected by that. With the things that have happened so far from a federal point of view, the interest rate increases, the focus point was to reduce that kind of a behavior in the markets, which is they want to keep more cash. So they want to reduce the supply of that kind of cash, so they don't have to print more. So we know that banks and financial institutions are not lending out as much. Whatever is there, we might end up seeing some of the debts being defaulted by businesses, by individuals, and so on, depending on the type of debt they have, which so far has dropped substantially. So we'll take a look at some of that as well. Michigan consumer sentiment coming up on Friday, along with Empire State Manufacturing Index. Two important newses to look at on a single day. Once again, Friday could also see a huge amount of movement. They are looking to see some amount of, they're seeing a little bit of a better reaction coming in on the state manufacturing index. Michigan consumer sentiment seems to be a possible contraction is what they're expecting. We'll look at those news on the day that it's going to happen. Overall, each of these news that we have scheduled are giving us an overall 250 to 300 pip daily moves. So 3 days we're going to be expecting. So Friday, I believe across both those news is we generally see 150 to maybe 200 news combined, 200 pip news. So 200 pip average, but 250 to 300 pips across just these 2 days. So the kind of range that we have in the markets right now, we can definitely expect that kind of a range to happen. All right, so that is with that kind of news. All right, so let me pull this off the chart. Okay, perfect. So weekly we do have a range. We know what to expect and we know where market can go up and down. Now it's about finding the right levels, taking the right trades, and taking it safely, because again, we are in a consolidated channel, so you want to be taking trades safely because we are in the midpoint of that channel, which means it may not work out the way that you might expect to. And so you should be collecting profits, taking smaller lots comparative to what you would at good levels, because right now the position that we are in, we are taking technical trend lines or retest based positions, which are not necessarily zone based positions. What would be a better zone in this range? 1914. We haven't tapped into this range even when we made the initial drop. Again, when we dropped, we formed a trend line, a symmetrical triangle, and now we broke through it, and now we're just with the retest as well. Now we're just kind of moving sideways as of now. Safer bets for you if you're trying to look for further buys and you haven't got into this entry here that I've taken. You should wait for 1920. Market breaks above, closure above on the 1 hour. The next one comes for a retest. You can take the entry and then let it run. Your stop loss would be below this trend line, so you want to take it below this wick right here. So what kind of a stop loss would that be? That would give you a 34, 35 pip stop loss, which should be really good, right? So yeah, keep an eye out from that perspective.